Welcome. This is the Day Trading Options Daily Review for June 29th, 2015. I'm Scott. He's Alan. We're going to be showing you how you can make 10% or more in 10 minutes or less, although sometimes making more than 10% requires a little longer investment of time. This is a very, very interesting day. There's an old saying that ships are safe in the harbor, but they're not built to sit in a harbor. They're built to be out on the sea. Sometimes it's rough, sometimes it's ready, sometimes it's windy. Sometimes the wind is not blowing your way. Sometimes it doesn't look like it's blowing your way, and it's going to blow you somewhere that actually is a lot better than where you were planning on going. And today is kind of that day. You're in the market. It's going kind of crazy, and sometimes what the indicators tell you to do don't really make sense based on the kind of craziness that's occurring. So the indicators are great. They're really important. You know, we want you to use them, but we also want you to use your head. And today is just a great example of that. So Alan, take it away.
Thank you. Yeah, the whole market, just about every stock. Let me just give you a little glimpse of it. Right there, this column here, every one of these stocks except for 3 gapped down a big amount. So if you're not a gap strategy guy, you know, or gal, you might be sitting on the sidelines going, yeah, I don't know what I'm going to do here. Because the other part, and I agree with you about indicators, is because they've all been running red, most of them are going to say you should be on the red side. In this case, it's like if there's a red move, it's going to be short, is what that little indicator means. But, you know, we've got some decent volume here, but this is saying green. Market's going green, and we're only at the third minute of the day. We're going to move forward another 1 minute and just see how it's going, and it's really not much different. So how about another? Whoa, what's going on with that stock? So you can see how much it jumped, and that should tell you that the market wants, and this is the daily thing, chart and chart. So this is the yesterday and the day before that and the day before that, all red, and so now this thing is looking really well to fill the gap. So let's say we get in a little bit late on this, or you go find another stock that you're not so late on, and you can go ride that. But for entertainment, I'm going to hit the buy on the call here. I'm not expecting this to go a lot further. There's not a lot of room here between the gap was right there. So it's already, oh, it's a little higher up at 75 cents above this roughly. So we're going to see if we can make a little bit of money on this one, but this is a clue of which way we should be going. It doesn't mean that's the right one to get. And so you can see that it's making it there to the previous low, and we've said many times the gaps sometimes is a rocky ride. So it made it to fill the gap, and I'm just going to say get out. And why would you get out? Well, first of all, I would actually be looking for a better stock than that one because I didn't like the monster candle, and you saw what happened with the monster candle. Boom, she comes back hard. So there were a lot of other stocks that were behaving the same way. And if I bring up the board here of stocks, you can see, look at all that green. Now, everything gapped red, but it's all filling up on the green side. So you could have almost bought anything. It's kind of one of those, you know, head spinning days. Like, why did it gap down? Well, this is oversold in the sense that somebody, well, not one person, but the whole market got pushed down, and then when it opened, it was like, wow, you know, the money poured in and says, let's buy this stuff because I think the you know, we're past the bottom here, and let's go get a deal on some cheap stocks. So let's go look at one more just for now. That was set up quite nicely, but wasn't as monstrous of a candle. It was still a big candle, but it actually had more room to go. And in this case, we're thinking about follow the leader. Well, the whole market's gone green, strongly green. And this one doesn't, you know, have anything bad. It's got, you know, better volume, and it's got more room before it fills that gap. So here we go. We're just going to, the gap is up at, way up there. I don't even know what that is. I can't read it. It's big gap, $70. So that would be like $5 away. Anyways, so we're going to say we like that one, even though it's a big candle. It's got more room to fill, and the whole market seems to be running that way. So we're not arguing. We're following the leader. So a little bit of a pullback, gap strategies, 9%, 7, 10. Now, where is the previous low? You can see it just above. Do you want to take your 10% or you want to just ride along? That's up to you. But you can see it actually hit pretty close to the previous low here, which is not far away from there. So if you wanted to take the money, you can. Let's just ride it a little longer. Remember, if you're going to do gaps, you might be in for a rocky ride. We're still up 2%. Now you're down, now you're up. See, this is where it gets a little bit ridiculous, which is also why you lost color. Why would you hang on? You were also close enough to the target, and you were up 18%. Why would you hang on? So this is the kind of thinking that we like to cover and give you the tools to play with. And, you know, it's covered in the course. I'm just going to say 18% is good money. I'm at SA. We've talked about that a number of times where you're hitting one of those barriers. There's a lot of reasons, bouncing off a previous low, that this is a good time to leave. There's not a lot of good reasons to stay. I don't have great volume. I have good volume, but I'm in a weird position. Remember, today is a weird day. We're gapped down. This is good money, and it'll probably, after it, let's say, you know, you got out here, for example, and then you're going to say, well, I'm going to wait for it to hit it again. Well, I've got some indicators working for me, but I don't have all of them. So if you wait for your chance, you may get another chance to fill the gap. So that was it for the whole day. Why would you want to hang around? That's the thing. Well, if it's a great trade on a good day, you hang around for the longer run. But right there, that's a good time to leave. No color, volume's done, basket's still green, but my stock isn't. And what did it do? It hit some barriers that we have talked about dozens of times. That when you start getting close to those things, see how close it was to that? That it's time to leave. So you wouldn't have lost money on that trade unless you hung on against all the warning signs. But you could have made some good money on a weird behaviored stock. Now, if you were a little bit more cautious, which is a good idea, you might go wait for some other stock that was doing well. And when would you get into that one? Well, it doesn't look so good. There it's looking a little better because it's after 9:45. What's it doing right after that? Is it going to keep running? It's already filled the gap here. So, you know, we don't know where this thing's going. The only thing I like about it is it's got the G, so it's a little bit more of a standard run. A bit more, there's no volume, so this is going to be a rocky road. So at this point, it's like it's proving itself a little bit more. It's broken above the pivot. It's continued after 9:45 to move in the green direction, so this stock could keep going. My only concern is 185% of its average move has already been reached. It's going to be a rocky road, and I wouldn't get into it. But let's just take a look at it. Should I hit the buy button, or should I just look at it? What do you think, Scott?
Hit the buy button, because let's just see what it actually is.
Okay, so we hit the buy button. So we're making a bit of money, but you can see it's a bit rocky up and down. And now you're down some money, up some money. I don't like these kinds of stocks, but we had the clues. And that was the part about it. So, you know, now you're up some money. Do you want to hang into that or get paid?
23%, 24%, it's pretty nice.
Yeah, I would just take that. Why? Because this is not a great stock on, and it's a weird day in the market. You don't get too many weird days, but this was definitely a weird day. If I can make any money on a weird day, I'm in for that, and I'll say thank you. But I will not expect to get any big long runs. So if we go look at the trades we did here, we that was this one right here. That was a rocky road, and we made 24%. It didn't take us too long, but it took a little longer than our usual. Tesla, it did a good job for us, and yeah, we got paid more than we expected, but we were filling a gap that was a bit bigger, and the market was already showing us that it was filling all the gaps. So that was a better trade than Avgo. And Avgo was also working on filling a gap, but it was a smaller gap. So the better money, because you both started around 935, was Tesla. But this was not a day to go for home runs. And so getting the 18%, was good. And you could see that for Tesla that it ran against us. Why? The market just is weird. It's unpredictable. It's like, as you were saying, what's going to happen after Greece has their vote, and there's just going to be a bunch of weirdness, just like the Swiss franc with, it went crazy a bunch of months back. It was sort of predictable it was going to do that, but when the market's weird, just take your profits and stay on the side. And anyways, so we had some opportunities today, but we looked at longer trades in previous days. There wasn't going to be a reliable one here. It'd be all jumpy.
Perfect. Great day, great job. Thank you, Alan. You showed us some really interesting things on a really interesting day. Some days are very smooth, some days are kind of crazy, different things happen. These gaps are create interesting opportunities. And even on days that are poor or challenging, still made some good money, which was great. So subscribe, bottom right-hand corner. Don't miss an exciting episode. We do have a question from the audience, and if it's okay with you, Alan, I'd like to ask it.
Sure.
And is it regulated, I'm assuming, option trading by government? I heard that option trading is just like gambling, and it's not possible to predict whether the price go up or down in 5 minutes. Thank you, Mahabubul.
So the last part of the question was, it's not possible to predict? Is that what?
Exactly, yes.
Well, we don't predict, we do probabilities. And most of the market behavior is by humans. And we have years of data that we've gone through that gives us that probabilities. So it's predicting. You can call it the same as probabilities, but a lot of people that do predicting, they do it on, well, such and such happened over there, and so over here we should be seeing la 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 la. And the stats on those people that do predictions are generally that they're right half the time. Well, that's unacceptable, especially if you're a person that's buying options. If you're a seller of options, 50-50 can be okay unless it runs hard against you. Then it's really bad, and I've seen people do that where they took $70,000 and turned it into mush because they were swing trading and selling options, and the market ran hard against them. So if you're looking at predictions, I wouldn't at all be looking at predictions. I'd be looking at behaviors, and this is why. Let me just show you statistics. Statistics are behavior. So here you can see that this blue line is and this is based on 20 days. It's a rolling 20 days moving averages of behavior. This has been this way for decades. This is how big the candle size is at that time of day, which is the first few minutes of the day. And then the average range of the candle gets small, and then it stays about that. So average body size of a candle is there. So the first part of the morning is bigger bodies. We don't know which direction they're going, but all we do know as one behavior is that the candles are generally bigger before this period of time. And I can load up a day from 5 years ago, and you'll see that it's generally the same stuff. So how does that help you? Well, so the last really above average candle is about 11.18. And we tell people that, you should get most of your trading done if you want to make more money before 11:30, because as you can see, the first few candles are huge, way up here, and then it starts to slow down, and where you get smaller ones and some big ones. But so that's a behavior. What is that based on? Lots of things, but it's been that way for years. That's what I care about. Another thing that I care about, and I call it a behavior again, is like these price points. I'm just going to highlight them. SA, for example, and Pivot, and the other ones. We've talked about them in other episodes. They work really well. You'll notice that these prices here struggled near that point. And this happens again and again. Now, why that happens, that's explained in the course, so I won't get into that. But that's a great behavior. So anything that is a behavior, which means it's driven by people who are trading the financials, or they've, in some cases, taught computers to follow their rules, so they've taught a computer to automate the behavior. It's repeatable because it's people, and it's their beliefs and rules. So if we look here, and I can just, here's a stock. I don't know how I'm going to make this simple, because really we've covered all this in a course. I can't really explain it any simpler. I'd like to, and that maybe is a job for Stephen. But if you go through the software, you'll know that all these indicators, and I'll get rid of some of them, like the mag line works 90% of the time. Why does it do that? Well, that's years of research based on behavior. So if you're on this side of the line, you should be making money. When it hits that side of the line and starts going down, you should be on that side to make money. When you're losing tint, that means it's going against you. See, that's math. And it doesn't care whether I'm looking at daily candles, monthly candles, weekly candles. It doesn't care. And that's why here's weekly candles. So here we've got the same kind of tint rules. It says this thing's trending, and the trend is stopped. So somewhere in here, you'd want to get out. If you used trend lines, you'd say, well, I would get out when the trend line broke. And so you can do that on top of what we've done. But you see the signal colors are there. They're all mathematically based, and they're all been tested on huge sets of data, millions. Actually, on daily candles, we tested it against 7 million daily candles. So the computer doesn't predict anything when it's drawing an indicator. It's based on reasonableness, which is also why, would you expect, see, like that's an unusually large red candle. These are daily candles, but mostly the candles trade within a normal kind of range. Now here it was a different range, but there the market took off and started trending. This stock in particular, started moving up and up and up. There's your trend line I just drew for you. So when it opened on the wrong side of the trend line, that's time to leave. But you'll notice here, tint. There's no tint of either kind. It's gone. And we've got, like I say, literally millions of candles you can look at and test all this stuff. And that's the point, is that we don't predict anything, and predicting is something I tried way back when, and I was pretty decent at it, like 10 years ago, but I don't do any of that anymore.
Well, it's hard to teach somebody how to use a crystal ball. That's the problem, right? I mean, you can be really, really good at predicting and make a ton of money, but when it comes to training somebody how to predict, here's your crystal ball, here's your little, your candles and everything else, and you got to hum, and I mean, it's tough getting the right tones. So yeah. You're better off to follow the trends and the probabilities.
Yeah, and that's where it's a mathematical solution more than it is where a lot of people are predicting, and they're using intuition, which is sometimes faulty, and they're using emotions. So here it is, 1929, and this kind of stuff's covered in the course. When should you get out? Well, the rules are pretty clear. Green here, it broke the trend line. No color here. Red here. Lots of red here. maybe you would have avoided the big fall, which, by the way, didn't actually take place until much later. Well, how about 2008? Let's get rid of that guy. Tell me your indicators work. Well, I see a lot of red here, and it's telling me the red at the beginning of the move. Anybody can say, oh, well, that was a big fall back here. But when you're up here, it's like, yeah, green's good. Green's not so good anymore. We're waiting for something. Oh, red's better, and red was better. And so here, you had a little bit of a red run, but not much. And it was like, well, get out. We don't know where it's going. It's not trending anymore. And that's the kind of stuff that we want, is the computer to do the analysis on a mathematical, which helps us be repeatable. And then what we do in the training is we add rules on top of the indicators, because it's like, this may be red, but is really now a good place to get into this one. What makes this red worse than this one? Well, what are the clues? Well, I see a blue candle here. I don't see a blue one here. I got red, and got a blue one there. Well, that blue is a small blue compared to the height of this body. You look at a few other things. Well, what's this little marker here, and what's these other lines? When you put it all together with the rules, and that again is what the course is for, is you actually have a whole package. You don't have just one thing. And that's why the high frequency traders, by the way, they started losing lots of money in the last few years, and so they're not as popular anymore because it's purely computer, and there's no human being sitting on top with, by the way, when I mix this with that, I shouldn't trade. That's right, and the computer didn't know that, and it gets into some bad trades like the flash crash and all these other things. It's like you need a human involved to do better. The computer can do it by itself, but it won't do as well as a team.
That's right. Thank you very much for that, Alan. Appreciate it. I'm sure that Maha Bubul appreciates it as well. That's the name, Mahabubul. I'm sorry if I screwed it up. Hopefully I said it right, but I don't know. Anyway, thank you very much for that. Thank you for joining us, everybody. We've got coupons with a deep discount for the 3 courses that we've got offered right now, so you can find out how stocks and options work, how you can make money when the market goes up, how you can make money when the market goes down, and then how the program works, and also some really good strategies. And then our 3rd course is some more advanced strategies. And we've got a full-time coach that will work with you one-on-one if, when you're done the courses, you feel you need some one-on-one help, which we always think is a really, really good idea. So thank you for joining us. Make sure you subscribe, and we'll see you next time. He's Alan. I'm Scott, www.wavesofprofit.com, and happy trading. Bye-bye.